Good morning traders and welcome back. In this video I'm going to be performing a top-down multi-time frame price action analysis on gold. So just before we get into the price action, if you recall previously I made an update when gold was here explaining all of the reasons why I anticipated that the breakout of this descending triangle was a trap to induce buyers and stop hunt to induce sellers and stop hunt buyers. And that's exactly what happens. The market broke back above and took the liquidity above this descending trend line. Then I made an update when the market was here, explaining all the reasons why we expected the market to make the move to the downside to complete this W formation at the neckline. And that's exactly what the market did. So now, as you can see, the market reacted off this demand and started to push to the upside. Again, I made an update when the market was here, explaining all the reasons why I anticipated this move. And as you can see, that's exactly what happens, right? So the price action has been following my projection perfectly. So let's give you a nice top-down analysis. Let's go to the monthly time frame. From a monthly perspective, what we can identify is we had a market which was consolidating in the form of this wedge at multi-year all-time high resistance. Now, the market pushed to the upside, spiked into all-time high prices, got rejected aggressively, and made the bearish breakout to the downside. During this bearish breakout to the downside, the market took out sell-side liquidity that was residing below this ascending trendline support. As well as taking out sell-side liquidity, in other words, the buyer's stop losses that was residing below this ascending trendline support, the market also induced sellers to the downside, sellers to enter the market. As the market broke to the downside, okay, sellers got induced trying to capitalize on what they anticipated this to be a breakout. So that move stop hunted the buyers and induced sellers, creating liquidity above. As you can see, the market made the move to the downside, then broke back above, indicating that this move here was a fake move, a manipulation move. Since the market made the bullish impulsive move and broke back above, the market provided us with a retracement. If you take your Fibonacci from the low to the high of the impulsive move, you can see that the market retraced perfectly into the 50% fib. The 50% fib was in confluence with this level of monthly demand that we have all across this area, also in confluence with the psychological level of 1800. So since the market made the impulsive move and retracement move, the market has started to make the continuation to the upside. If you take your Fibonacci now from the low to the high of the monthly retracement move, the minus 0.272 could be a nice potential monthly upside target. And as you can see, that upside target prints according to the Fibonacci, prints a new all-time high just above this current level. And as you can see, we have relative equal highs in the form of this triple top, which is an area of liquidity just below that zone, which gives us added confluence to expect price to take out these highs. Now, if we drop down to the weekly time frame, what we can identify from a weekly perspective, the market was consolidating in the form of this descending trend line, this descending triangle, something we've already analyzed and already updated you guys on. Okay, now this descending triangle occurred during a corrective move. As you can see, the market here, higher high, higher low, higher high, higher low, higher high, higher low. So although the descending triangle is a bearish pattern, when you find a bearish pattern inside of a bullish market, a lot of the times that bearish pattern is just part of a retracement. And when the market breaks out of that pattern, because it is a bearish pattern, that induces traders to open positions in the opposite direction where the market wants to move. In other words, this induces liquidity into the market, and then the market will make the intended move once the masses, in other words, the retail traders, have been trapped into trading in the opposite direction. And as you can see, that's exactly what happened here. We made the impulse, made the higher high, then we got the corrective move, lower highs, lower lows, lower highs, lower lows. We started to break out to the downside aggressively. All of the traders that were buying this support got stop hunted with the move to the downside, and all of the traders that were selling this breakout then got stop hunted with the move to the upside. So we had a beautiful manipulation. Okay, and now from a weekly perspective, what I can spot is the market perfectly made a bullish break of structure. The market perfectly made a bullish break of structure from point A to point B. and form the higher high. Where's the last bearish where's the last bearish candle before the bullish break of structure? It's exactly here. This gives us a bullish order block. As you can see, price spiked into the bullish order block perfectly and then made this massive move to the upside, and again has formed a new higher high and has made a new higher high. So now let's have a look at the price action. We have a bullish move from point A to point B. Now, if we just remove the triangle for a moment, because I want to give you a nice clean analysis here. What this bit of price action essentially is a sweep of that low right there, a sweep of sell side liquidity, followed by a bullish market structure shift. Okay, because we got the lower low, then the higher high, then the higher low. Okay, so that's a market structure shift. If you take your Fibonacci from the low to the high of the impulsive move, you can see that the market made the impulse, the market made the retracement, and now the market reacted off the minus 0.382. Sorry, not the minus, the 0.382. In confluence with this horizontal level of structure. So the market's made the impulse, the correction, and now it's making the continuation to the upside. If you now take your Fibonacci from the low to the high of the weekly corrective move, the minus 0.272 Fibonacci will be a nice weekly upside target for a new higher high. Okay, which aligns very nicely with all of this level of supply that we have across the 2000 level. So now we drop down to the daily time frame in anticipation that the market's going to meet this target and this target right here. And what we can identify from a daily perspective is we are moving to the upside. However, we are about to test a significant level of supply. What is the significant level of supply? It is the psychological level of 2000, historically strong level for gold. And that means the market could easily reject this area. Okay, so now we have to look for areas of demand for the market to potentially retrace into for us to monitor. The first obvious level is this bullish order block. This bullish order block, from a daily perspective, okay, is a nice area to monitor for a potential long opportunity. If we now drop down to the 4-hour time frame, we can see from a 4-hour perspective how the market here again was consolidating in the form of this wedge. Now, as you've found out already, these are traps, right? We had this accumulation, manipulation to the downside, and now we are distributing to the upside, and the market is targeting the liquidity above these highs. So just to conclude, I am bullish. We have a weekly upside target of 2030, a swing target of 2030, and an even bigger swing target of 2137, right? What I'm looking for here is a retracement into this level of demand, fill this imbalance that we have during this, that was created during this leg to the upside, and then all inside of this area right here is where I'm going to monitor the market for potential buying opportunities. Remember guys, the monthly, weekly, daily, 4-hourly timeframes are the best timeframes for the directional aspect of the market, and we use the lower timeframes to get a precise entry. So we will be patiently waiting with students for the market to retrace into our area of demand, and we will be monitoring price action on the lower timeframes all inside of this area for a potential buying opportunity. Hope you enjoyed the video guys. Trade safe. Speak to you later.